Welcome back to my YouTube channel. Today I am going to discuss about Adani Hindenburg episode. Although I had zero investment in Adani group of companies and I thought I was not capable of getting into details, that is the reason of delay. But in the interest of my investors, it is very important to understand how to avoid such situation. And due to some reason, if you happen to be in that situation, then how to exit gracefully. That's very important. So friends, today I am going to discuss about three things. One, the Hindenburg report. Obviously, I will not get into detail of the report. I'll just touch upon the salient points of the report, what 4 or 5 points they are trying to highlight. Secondly, I would touch upon a recent video by Professor Ashwath Damodaran, who is supposed to be expert in valuation, and his views are very important. Obviously, I have picked up few slides from his long presentation, and I will put in front of you in a simple language. Thirdly, I'll discuss my own take on Adani situation, how to avoid such situation in future. The corporate sector in India or even in USA are not untouched of such situation. Sometime back, we came across DLF Yes Bank. Before that, we had a huge situation coming in from Satyam Computers. So from time to time, it keeps on coming. So as an investor, how to really stay away from such situations, and due to some reason, in case you get into it, then how to exit gracefully. So let's get going. How to avoid Adani Hindenburg type situations. That is the main topic we are talking today. So if you look at Hindenburg report, they came up with 5 important points which are disturbing points. I will not get into the situation either emotionally or politically. So let us stay away from the situation and just look at the situation from an investor point of view. So point 1, weak fundamentals. What Hindenburg said was the Adani companies, they grew a lot in last 3 years. In fact, they multiplied many folds in last 3 years based on weak fundamentals. Second thing they say that manipulation through shell companies, that Adani has manipulated the pricing on the stock exchange through shell companies, and these shell companies are registered in Mauritius and they invest in Adani group of companies as a FII. So sometimes when we get gung-ho about FII investment, we need to look at very carefully whether DII and FII both are investing. If both are investing, then with a certain certainty we can say that the investment appears sort of genuine. Otherwise, we need to keep our finger crossed. Third is manipulated earnings. This is very similar to what Satyam has done. That is what is the allegation by Hindenburg. So neither I am saying yes nor no, because only time will say what is correct thing. And inexperienced auditor. Also Hindenburg has put another allegation saying that it's a very large group. They want an auditor to the caliber of Price PwC or KPMG or that type of auditor. But mind it, in case of Satyam, auditors were quite big. So I think this allegation, although leveled by Hindenburg, may or may not be true, but common sense says that if you have a very reputed auditor, chances of easy manipulation is quite low. And political connections. Each and every time such a scam comes, eventually we get into a political connections. So whether there is a political connections or no, let us stay away from this as an investor. But these allegations are very serious allegations, and as an investor, the moment such allegations are leveled, one need to come out if at all you had invested in that company. You should not even wait for a second. Whatever money you get, you just come out, because ethics or ethical practices for investing company is of paramount importance. And the moment you come across a situation when that is being questioned, I don't think there is rationale of staying in that investment. So having said these 5 very serious allegations by Hindenburg, Let us move forward and let's talk about what Professor Damodaran had to say on these allegations, because he is, to my belief, a third party. He is a professor and his observations will be quite relevant. But before I get into his observations, it is important to say that there was a news in between that before Hindenburg report, as you know, Adani Group bought NDTV and Ravish Kumar was fired. So Ravish Kumar visited New York and he visited Hindenburg office 6 times while his stay in US. Similarly, the connection with government, there are claims and counter-claims coming from Mr. Adani connections to Congress, BJP and all political party. So since today BJP is in power, people will start linking Adani with high-level politicians. And it is a known fact that a group of this type, family-owned organization in India, they do maintain close connections with political parties. That is the fact of the life. So with this caveat, let's move forward. Here, if you look at Adani business primarily is in infrastructure space. Infra is the key sector which need to perform for growth of India. And Adani looked at this opportunity. There have been many stories in infrastructure, but as you know, infra is a very long-term business, a long gestation period, and return is very muted. So from that perspective, from investor point of view, hypes are created from time to time. But if you look at a long-term investor, infra may not be a good space to be in. Even a company like L&T, which is rock solid, very professional company. If you analyze L&T return over 10 years, 15 years, 20 years, it may not pass a long-term investment criteria. So Adani mainly play in infra space. And in last 3 years, Adani has become a local to a global player. They had a small port in Gujarat, probably they made a lot of money, and in last few years they have expanded like crazy. And how they have expanded? They have used primarily debt vehicle to expand. They have not come up with any equity. The only Adani believer is in food space, and recently they have acquired cement company like SUC and Gujarat Ambuja. I am not bringing them in because these two companies have gone through many hands and they are still not fully acclimatized with Adani culture. If you look at the return on capital employed, normally in my videos I have been talking, you should never look at a company if ROC is less than 15%. Ideally 20% plus is a good mark. If you look at Adani company, this is a slide compiled by Professor Damodaran, and I have picked up a slide from his YouTube video. Starting 2002 to 2015, Adani ROCE was in the range of 14%, which has become at current rate after expansion, it is at 3.18%, which is very, very poor, abysmal. And as a prudent investor, unless you want to make a quick buck from manipulation or speculation, nobody should invest at this level. Although it is a known fact that even ROCE per company like L&T may not be 20%. That is one of the reasons I stay away from infrastructure. Sales and to the invested capital ratio, if you look at it, has come down to 1.8%, which is again very, very poor. Second thing, as I mentioned to you, Adani Group is primarily fueled by debt. So opposition parties today, they are raising some sort of noise saying that the debts are from public sector banks and all, but Adani came with clarification, which is a factual position also. Out of 2,50,000 crores of debt, only 80,000 crores have been taken from the local market. Balance are taken from international market. So to that extent, involvement of Indian banks, and out of this 80,000 crores, around 30,000 crores SBI has funded Adani. Obviously, they will keep on blaming each other for political connections, but as I mentioned to you, let's stay away and purely look from an investor point of view. So now here, debt to capital is quite high. When you look at debt to interest coverage ratio, this is recent interest coverage ratio is 1.44 only, whereas even a public sector company will have interest coverage ratio in terms of 5, 6 and more. Even L&T will have quite a few, much higher than 1.44. So here, whatever debt they had taken, the cover of the debt is very low. It appeared that Adani, we are not willing to let go its control on the company, its equity. I am reminded of a situation why I was talking to one of the companies where I used to work, chairman of that company, and we are having some sort of conversation in terms of dilution and comparing that company with company like Infosys, where Mr. Narayan Murthy owes only 9% of the company. But you know, when you look at his wealth today, with 9%, his wealth is enormous. But this chairman, who is a very reputed gentleman, very nice, certainly very good in terms of ethical practices, but I am talking about this company in terms of feeling on, in terms of ownership. Even this gentleman didn't want the ownership to get diluted at all. And although they have done all ethical practices, but you know, there is a sort of debate between dilution, non-dilution, there is a pros and cons. So that is not the topic of this coverage, and I will not go into details there. But one thing is very sure, that Adani hugely expanded based on debt. So highly leveraged company, coverage, interest coverage ratio is very poor. Even when you go to the Adani group of company and look at their current ratio, you will find that it is very low compared to industry norm. So therefore, certainly this company lies on a big risk at any particular point in time. When I look at the distribution of shareholding, Adani group of company, all companies, their holding is more than 70%. And FII 15%, which you are seeing here, allegation from Hindenburg is these are shell companies. But one thing I would like to bring here, friends, mutual fund investment is very low. So maybe there something appears fishy here. If both are close to each other, then it justifies that investments are genuine. Maybe as a layman I am talking that. But here certainly something appears fishy. Retail investors is just 2%. So floating share in the market is very, very less. And therefore it is very simple to manipulate the pricing of the share. That comes here. And that is what Hindenburg says, that whole price has been manipulated in last 3 years using these shell companies in Mauritius. Now, Professor Damodaran also has done valuation. He is supposed to be expert in valuing companies. Normally he doesn't take up company like this. But since this episode is very hot, he did valuation of Adani Enterprise, which is the flagship company. And as per his discounted cash flow method, the valuation comes 950 rupees. Even today, after 50% fall, this company is trading at 1950. Does it mean this is going to fall another 50%? Not knowing, not sure. Nobody can predict the share market. But purely if you go by value theory, 950 comes valuation from calculation. And mind it, Professor Damodaran has taken all the parameters for this valuation as a very, very optimistic parameters. For instance, growth ratio he has considered the highest. The earning ratio he has considered the best in the given situation, and that way he had arrived at 950. Now, since Adani group of companies is purely a family-owned organization, and family-owned organization has its own interest in terms of they don't want to control, let go outside. They want to have the wealth inside. If the money is invested in one company, it is diverted to other companies. And whatever regulators can say, but we all know this keeps on happening in India regularly. From that perspective, even to 950, one has to give some discount since it is a family-owned organization. And if you go by that, the valuation will be quite lower than 950 for Adani Enterprises, as it is family-owned organization. And when we also apply performance parameters and then give discount, then this valuation will come down drastically. So without talking about it, I will move to the next slide, where I said I will bring you to the my way of looking at, which I have been propagating in all my videos to my investors. Even though you may not be a big person in finance area, you may not understand the ratios in finance, etc. But if you follow the basic tricks, you will never committed mistake of investing in Adani group of companies. So let's move and see how. I have picked up here Adani Enterprises. You can repeat this analysis for all the company. And you know, as you remember, we have always talked that ROC and ROE should be more than 15% minimum. These two companies fail on that criteria. ROC and ROE in both the companies are quite low. even though it is an infrastructure company, this should be more than 10-12%. On that criteria also it fails. Then it comes to in terms of dividend yield, very poor. For a growth company, this is supposed to be okay. When you talk about sales growth and profit growth, again 9%. Our thing is minimum it should exceed 10% if you want to do an investment for long term. And profit growth has been minus 3%, which is alarming. So all these criteria, Adani Enterprises is rejected. Now I'll go to the valuation criteria. I'll show how this doesn't perform on those criteria at all. In terms of PEG ratio, absolutely something which you should never invest. And when you talk about the free cash flow, all these numbers are negative. So if somebody had done a basic due diligence without getting into details, the answer is don't invest in Adani Group, and that's the reason I didn't put even a single penny in any of the Adani companies, which has seen a fantastic rise in recent years. Some of my friends in Bangalore used to tell me you must get advantage of this situation, but I kept control on my temptation and never put even a single penny in Adani Group. Now I'll take you through the P criteria. When you look at the P ratio here, look at 3 years before the P was typically in the range of about 15-16, and 15-16 is an excellent P for an infrastructure company. And from that time it started rising and went up to 427, a crazy number. Just in last video I say castle in the air. It's from a book actually, that many times castle is built in the air. This appears as one of the case of that type. And after Hindenburg disclosure, it is falling. It has come to about 150. Friends, when you are saying 15 and 150, make your own guess what price you should be investing. And then take a call. To me, looking at the basic criteria of investing on ROC, ROE, sales growth, PEG, debt equity ratio, and leverage, etc., and also the P ratio, historical P ratio, it appears a no-go. So even though Adani shares and fall to, let's say, 600, 650, will I invest? I'm not sure. Friends, unless you are a speculator, unless you want to make a quick gain in the equity market, to my mind, which is not possible, but if you believe in so, maybe you can try Adani group of companies. But otherwise, there are better companies where your money will grow consistently, compounding consistently at 15-20% rate. And I think person like me and you should be very happy with those companies. So hope you liked the deliberation today. If you like this video, please forward to your group using WhatsApp, Facebook, LinkedIn, and ask your friends to subscribe to the channel. If you have not subscribed so far, please do subscribe. Don't forget putting your comment, because it's a very important topic for you and me. It questions the basic investment rationale. If this case is not corrected, the investors will lose confidence. But investors like me and you should never ever get lured, should never ever get tempted on what growth you are saying purely on paper. So stay away from castle in the air. Have a happy investing journey. Thank you for your time today. See you next time.